What is going on, all of my SoFi stock investors? Welcome back to the channel. SoFi stock is down about 1.24% today, and we're going to talk about exactly what that is, what is affecting the markets, and what is going to be the next big catalyst that will affect the markets by the end of this week that will directly affect SoFi stock. So let's dive into it. This video is going to be on the shorter side, so hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section, and get your free stock with Webull, Moomoo, and Public down below in the description of this video. So diving straight into it, I don't want to waste any of your guys' time. What is really affecting the markets today is a couple things. So if we go and click on CNBC, Apple News, that's been all in the headlines, but we could see Fed GDP tracker shows the economy could be on the brink of a recession, and this actually just came out not too long ago. It says the Atlanta Federal Reserve's GDP Now tracker is now pointing to an annualized gain of just 0.9% for the second quarter, down from an estimated 1.3% increase less than a week ago. With Q1 growth down 1.5%, a second consecutive quarter of negative growth means a rule of thumb definition for a recession. The National Bureau of Economic Research, the official arbiter, says a recession can include 2 straight negative GDP prints, but that's not necessarily the case. Now, this is obviously not a great headline. At the same time, you see Target saying they expect squeezed profits from aggressive plan to get rid of unwanted inventory. And then another bad headline. World Bank slashes global growth forecast to 2.9%, warns of 1970s style stagflation. And it says the bank warned the economy could slip into a period of stagflation reminiscent of the 1970s. For many countries, recessions will be hard to avoid, World Bank President David Malpass said. And he does go on to say that essentially growth is expected to then hover around that level through 2023 to 2024, and that means about 1.2 percentage points. While inflation remains above target in most countries, the report said, pointing to stagflation risk. And that's obviously not a great thing. You don't want to hear stagflation. And if you don't know what stagflation means, essentially stagflation is stagnant growth and high inflation, meaning you kind of just lose across the board. But really, at the same time, during stagflationary periods, growth stocks that actually are growing higher than the rate of inflation can do very, very well. And obviously, SoFi might be one of those. But what has really affected SoFi over the last couple of days has been the bond yields, and the bond yields have went up quite dramatically over the last couple of days. We were just over 3%. Now we're slightly back under 3%, but we're still way too high, and we're going up way too quickly. So this is really affecting the borrowing rates, and it's making it more expensive for possible customers to use SoFi products, right? If SoFi is really into lending, and your lending rate's going up, well, that's going to minus out some people that are unable to use SoFi as a platform, right? As a lending platform. Now, SoFi does, have many different businesses, and they're very diversified in that aspect, but still, it's not a good thing to be seeing overall. Now, unfortunately, I would take a look at SoFi, the insider buying, the short interest, all of that, but unfortunately, Ortex did not update my payment info, so they went to renew my subscription with them, and it essentially did not go through. So I'm contacting them right now, and that's why I was even debating making this video, because I can't go over the normal data that I usually go over. So that is very unfortunate. Hopefully that is all fixed up by tomorrow. But nonetheless, here's this article, which I find just very interesting. It says, don't follow insider buying into SoFi stock yet, but they do point to a second half of 2022, if not a 2023, that is very, very bullish, and has pointed out that Anthony Noto on Monday bought 21,750 shares at an average price of $6.90. Last week, bought 21,215 shares for an average price of $7.07. Less than 2 weeks ago, bought 37,000 shares, picked up for $6.72 per share, and he's bought shares more than 12 times in 2022 so far, increasing his cumulative SoFi stock position to nearly 3.4 million shares owned. And does go on to say that the technicals really are sending mixed messages. Now, I I agree with kind of what this guy is saying. Essentially, like, don't expect to buy SoFi stock and instantly have, you know, a 100% gainer or multi 100% gainer, right? But buying SoFi stock right now for the long term, I think, is a very, very good bet, and something that I am betting a lot of my personal net worth on, and that's why I like to cover SoFi. And I think there's a huge potential opportunity here with SoFi stock. So I do think right now is a good time to be buying, but you really got to keep in mind the second half of 2022, if not the first half of 2023. That's where you could start to see SoFi really holding its own, right? That's where I think SoFi as a business is going to prove that it can weather this storm of Fed tightening, quantitative tightening, something that we have not seen in a very long time. We've only seen quantitative tightening one time. That was in 2018, and that completely crashed the markets like 30%. So there is that. Now, the biggest thing for this week, as far as economic data, things that could really move the markets in a substantial way, is going to be the inflation rate year over year, inflation rate, core inflation rate year over year, inflation rate year over year, as well as Michigan Consumer Sentiment Survey. And that comes out on Friday. Now, on today, we actually did get the trade report that came out, the balance of trade, and that was actually very, very positive. And that's a reason why the markets are potentially up, you know, almost 1% on the NASDAQ today. The Russell 2000 up almost 1% as well. But really, the inflation report, I think it's kind of just going to be seen as a negative overall. And I do think the next couple of days, you could have that negative downside pressure because of people expecting CPI to be negative. And it's very hard to say, you know, obviously the food and energy situation is not so good. If you've been to a gas pump, then you can vouch for that one. So I think that's going to affect the CPI report a lot. And it might start to eat into core CPI because, you know, when gas prices are up so high, a lot of businesses get affected by gas prices, even if they are not directly a energy company, and they have to raise prices because their costs are going up. Say for something like Amazon, right, with all their vehicles, the gas prices are through the roof. Amazon's going to have to raise prices some way, shape, or form to try to compensate for some of that. So, you know, I do think that's a big potential negative catalyst, but I do think right now is a good time to be buying SoFi stock for the long term. And that's basically what I have for this video. We can't really go over the data, like I said, because Ortex has not updated my subscription. So I'm working on that to see if we can get that done here today, so we can have that ready to go for tomorrow. There's going to be a lot to talk about, the option activity, the short interest, all of that. And you can imagine all of that information is still you know, very high. Shorts have not covered at all. If anything, they continue to short SoFi stock and continue to buy puts on the stock. So that's going to be all for this video. Hit the like button, subscribe to the channel, source comments, questions, or concerns down below in the comment section. Thank you guys for tuning in. That's what you guys need to know. Enjoy the rest of your day, and I will see you in the next one.